Hello guys, welcome back to my channel. Growth Finance here. For the new subscribers or for the new entrants, please make sure you subscribe to this channel. Hit like button, turn your notifications on. In the comment section, comment on what you like to learn on. And in this next video, we're going to be looking at swing trading versus day trading. Let's hit it. In our last video, we checked out currency pairs, and today we'll be checking out what we call um, let's see, day trading versus swing trading. Most of you traders, you don't really know who you are, you don't really know why you fall, you don't know what you do most of the time. You don't know if you're a day trader or if you're a swing trader, if you're a scalper, or there are so many strategies of making money out of the forex market. But as for today, we shall be covering what we call day trading versus swing trading. Don't forget to hit the like button and subscribe. Please be with me from the start to the end. What is day trading? Day trading is where a trader places multiple trades in a day from different market sessions. Let's say you're placing a trade for 30 minutes, you trade for an hour, you trade for 5 hours. As long as your trade is within a day, a single day, or doesn't go past a day, you are a day trader. What differentiates you from a swing trader is that a swing trader is basically holding trades for days or even weeks. A swing trader may place a trade today or may put his trade limit or buy limit or sell limit, and it is triggered, and he will be in that trade for a week, even 2 weeks, or even 3 days, depending on how long he or she wishes to stay in the trade. Furthermore, we can go in detail to check out, what makes you a swing trader and what makes you a day trader. Here, as you can see on the screen, we have what makes you a swing trader. Make several trades per week. Like I said before, as a swing trader, you're supposed to make several trades, not in a day, but in a week or weeks. You can have like 5 trades in a week. You can have 2 trades in a week, depending on how many trades you're willing to place and how many opportunities the market presents you with. Point number 2, we're looking at positions last from days to weeks. You hold a position or you hold a trade for days, from today, tomorrow, the other day, and until your take profit is hit. Remember, when you're trading, you have to have your risk management at the best. Always set your take profit, set your stop loss, and you'll be secure. When you're a swing trader, you're also a part-time trader. Let's say, because as a swing trader, you're going to place a trade and you're not to be watching the market for the rest of the day. You place your trade today, you close them because you've set your stop loss, you've set your take profit. This trade automatically kills itself if either the stop loss is hit or the take profit is hit. You don't need to be on the trade or on the chart or the candlesticks the whole day, the whole time in the trade. Most of the swing traders actually have different employment opportunities. They are working for other companies, they have their own other jobs apart from trading. Furthermore, we're going to look at utilizes trends and momentum indicators. What are these trends and momentum indicators? If you look at your chart, you have what we call the resistance and the support. The channel in which the resistance and the support are positioned, where the market candlesticks are moving, is what we call your trend. Where is your trend going up or is it going down? The indicators that are used by swing traders mostly, you can have the Fibonacci retracement, and many more, depending on what works for you. We all traders have different strategies and different indicators that we use. Like I said, even resistance and support are all indicators of getting an entry point into a trade. A swing trader also can be accomplished with a standard brokerage account. You have to have your standard brokerage account. There are different brokerage accounts. You have MetaTrader 4, XNS, you have FX Pro, you have Ice Markets. There are different brokerage accounts. So one of the last points here, we shall look at fewer but more substantial gains or losses. What do they mean? When you're a swing trader, when you place a trade, this trade is going to hold for, let's say, a week or a month. Okay? So, or even 3 months, depending on how you're holding the trade. And those guys who do Bitcoin, apart from Forex, can hold their trade for months. So, when you make a loss, you're making a huge loss because you've been holding a trade for a long time. Mostly when you're holding this as a swing trader, your stop loss carries more pips than someone who's a day trader. You may have your stop loss at around 50 pips, you may have your stop loss around 20 pips, but a day trader can't have a stop loss at all those pips, because what exactly are you doing in business, or what are you doing in Forex? On the other hand, you also, if you make a profit, you're going to gain so much because you've held this trade for long. Your profit margin is high. Okay, so let's now look at what makes you a day trader. Multiple trades a day, that's one. You can even have 5 trades a day. You can have 10 trades a day, depending on how efficient you are, and how good you are at your strategy and your rules. You can also have positions that last from minutes, hours to days. Another point is the full-time job. As the day trader, you're dedicating your day time to trading. You're going to hold a trade for 30 minutes. After that, you're going to hold another trade for an hour. So you literally have no time to do other kind of business. So your time is focused and put into trading, into Forex, into crypto, into anything, as long as it is on the capital markets. So use short-term buy and sell signals. What do I mean? The signals that give you entry points are for short term. You see, you can't hold a trade for more than 30 minutes. The signals that you're going to use are going to help a trade that is going to last 30 minutes, an hour, 2 hours, 3 hours, not more than a day. Okay, so the signals you're supposed to be using here, you can use resistance and support. I'm going to be showing you more of these signals and to lighten you up a bit more. Decisiveness. One of the major factors for a successful trader, you have to be able to make good decisions. Not bad decisions, good decisions. Your decisions have to be up to the point. You only enter a trade when you confirm the decision made is the best decision to make. Okay? Then discipline. You can't be a successful trader without discipline. If you're not sure disciplined, trading is going to be easy for you, because everything comes with ease, because you're patient with the market, you wait for the right signals, and then you place your trade. Because if you're a day trader and you're not disciplined, you're going to place multiple trades, and all these trades are going to lead you into losses, because you're not disciplined. You don't know when to stop, you don't know when to continue, you're just there. Point, as for me, is due diligence. Are you intelligent? Okay, let's go ahead. So, some of the technical tools used by swing traders and day traders are highlighted here, and let's go through them. For swing traders, we have the moving averages. The moving averages. You have the price action. Price action is, when I talk about price action, is there's what we call past price action and present price action. You cannot get an entry point if you don't consider the past price action, because past price action is going to tell you what is going to happen next in the market. Okay. Furthermore, we are going to look at support and resistance levels. But before I continue to support and resistance levels, when I talk about price action, now we're looking at price action as a swing trader. We're going to look at price action in time frames, not small time frames. We're going to look at price action in 4 hours, a day, something like that, not in 30 minutes, an hour, no. But maybe you can look at it in an hour as you're trying to get the exact entry point. But as far as for long, you need to look at the time frames in big time frames. So the Fibonacci retracement is one of the common tools used to identify entry points and know where the market is headed. Technical tools used by day traders. Similarly, you can use the above technical tools also as a day trader. But I recommend the following. Fundamentals. Fundamentals is basically a trading news. If you look at, for instance, I use investing.com. These news updates are always there and they help you so much to prevent you from making entries when the news is to be released. Okay, it wouldn't be a good idea to enter trade on any pair, any currency pair that has USD when the NFT is going to be released. That would be a joke, right? So support and resistance, like I said. Now for support and resistance, it works both ways. As a swing trader and as a day trader, you need both the support and resistance. As for my strategy, then price action, it also comes in hand, but this time around, price action, you're looking at price action in short time frames, not long time frames. Okay, you're looking at it in short time frames. So, just to add on what I may not be having in my PDF, as a trader, you should be having rules, and these rules are the ones that prevent you from making unthought of decisions. Your decisions are supposed to come based on your rules. What do your rules tell you? So as a trader, you're supposed to have rules that guide you when you're going to place a trade, when you're going to close a trade, when you're going to set your take profit, when you're going to set your stop loss. So once again, your Guru's Finest here. You can subscribe to my channel and hit the like button.